Good morning, everybody. Happy Monday. Welcome to our United We Grow webinar series. My name is Audrey. I'm with United Way of the Black Hills, and I will be the moderator for this series. I'd first like to remind everybody that this session is being recorded. So if you happen to miss any parts or you come in after the fact, we will have that recorded to view on our website and on YouTube as well. And in addition to that, we are accepting questions in the comments section of Facebook Live. So if you have any questions, feel free to ask those in the comments section, and we will address those following the presentation. We recognize here at United Way of the Black Hills that there are just a lot of resources right now, and many to navigate during this time. As collaborators and facilitators for the Black Hills and local nonprofits, we've learned that there is a need for educational tips and resources that are specific to nonprofit organizations. In addition, we had launched back in early March our United We Stand COVID-19 Relief Fund, where we are helping provide financial assistance to nonprofit local organizations that are providing some amazing services and resources to families here in the community that need those assistance. So at this time, I would like to introduce Jean Smith for our series here. Jean is a 1994 honors graduate from the University of South Dakota and has a Bachelor of Science degree in accounting. She joined Ketel Thorstenson LLP after graduation as an audit associate, and her hard work and dedication resulted in her promotion to audit partner in 2005. She has over 25 years of audit experience, to include managing the audit department and being in charge of technical standards implementation and quality control measures. Her passion is working with nonprofit organizations to include accounting, auditing, tax preparation, and obtaining and maintaining tax-exempt status. She loves working with each and every one of her clients and truly considers them to be her friends for life. Outside of the office, Jean can be found FaceTiming her college-age friends, enjoying long walks, cheering on the Minnesota Twins, and snuggling in for a good movie. Thank you, and I turn it over to Jean.
Thanks, Audrey, and good morning, everyone. I am passionate about working with nonprofit organizations, and I'm really excited to be partnering with United Way this morning. We all know how important it is to share resources and collaborate in times of crisis and change, and I'm really just honored to be a small part of that this morning. So we'll jump right in and talk about our agenda today to get us started. We're going to be visiting about managing cash flows, some forecasting and some budgeting tips, things that might help you adapt to the changing financial situation that I'm sure you find yourselves in today. We're also going to talk a little bit about internal controls. Now, some of you may wonder why that's important. We know internal controls are important on a daily basis, but really in time of crisis, they're even more important, and especially when you have changing processes, employees working in remote locations, and things of that nature. So we're going to keep that top of mind and discuss some techniques there as well. As Audrey mentioned, we will have some time at the end for some Q&A, so please feel free to comment your questions, and she'll be tracking that for us as we go. When we talk about managing cash flow, one of the most important things to consider is controlling your spending. Right now, we don't have a lot of control over the dollars that are coming into us. We know that contributions have slowed down. Some of our granting agencies are working on smaller staffs and not able to respond as quickly to requests. Fundraising events have been canceled in a lot of cases, and we really just don't have a lot of control over the dollars coming into our organization. So what we can control is what goes out, and we're going to talk a little bit about how to manage that and control the expenditures that you're incurring on a daily basis. We're also going to discuss some of the existing resources and some of the financial programs that might be new and available to help you out in this time. So if we think about focusing on controlling spending, the thing I like to tell nonprofit organizations is to really dial that back and think about what your mission is. Now, I know for some of you that might seem a little silly. You're probably saying, well, of course I know what my mission is. I live it every day. I talk to my board members about it. I'm out in the community explaining my mission so that people will donate money to me. Of course, that's what I focus on, right? But in a time like this where we're so buried with emergency stuff and things coming in on a regular basis that we're dealing with, sometimes we forget to get back to the basics. And the basic of your mission is really important right now. I want to give you an example. Let's say that your organization was formed 20 years ago to help feed the homeless. That was your main purpose. And over the course of the last many years, you've maybe expanded that mission a little bit. Now you're out educating the public about homeless needs. You're talking to people about nutritional facts and things that will help keep the homeless population healthy. Maybe you're providing wellness checks. Maybe you're helping transition them into housing or transportation needs. All of these things you might do are part of your mission, but they've expanded from your core basic mission. And when you're in a mode where you don't have the resources you need to conduct every activity, getting back to what the core mission is really imperative to being able to succeed. So in this case, if your core mission was feeding the homeless, then maybe it's time to cut out all of the non-essential stuff, all of the non-essential expenses and programs. For example, you don't need to travel to a conference. Many of us can't travel right now anyway, but that's certainly not something that may be necessary in order to focus on just feeding the hungry in the community. You maybe don't need to do the education to the public. You maybe can skip some promotion and advertising needs. Fundraisers have been canceled. Maybe you don't need to reschedule them. Maybe you have the resources you need on hand to just get down to the basics. And if you focus on that, that's a great way to really cut some things and control those expenditures. Also consider cutting back programs in general. We talked about in this example, if you're feeding the hungry, maybe you don't need to do any public speaking or any type of seminars for the public. You can likely reduce a few of those offshoot programs and also cut back on some salaries potentially. We all know that salaries is one of the largest expenses for a nonprofit organization, along with the related benefits, of course. And if there's a way that you can reduce some of that cost, that may help you get through to the end of this crisis. Now, I do want to remind you, we're going to talk about this in a minute, but if you do have a PPP loan, you don't want to be cutting salaries. You want to focus on retaining employees and retaining salary levels so that you can get the best forgiveness possible on that loan. But we will discuss that here in a second. With that opportunity to potentially reduce some salaries, think about discretionary benefits, things like 401k matches, bonus plans, anything of that nature that's out there may need to be temporarily suspended to get by. If you're not cutting salaries, but you're still cutting programs, also consider what you can have those employees doing that will help put you in a good position to resume operations later. Potentially, I've heard of nonprofits that have their staff doing cleaning of the facility, deep cleaning of things to be ready to reopen. Looking at potential future grants, doing some research, finding some ways to bring money in down the road when things are a little bit more back to normal, so to speak. Looking at potential fundraising events down the road, capital campaigns. Maybe you've got somebody on staff that has a little hidden talent and can do some mining in the community to find some folks that might be willing to help with a capital campaign. And maybe that will save you some professional fees down the road. But just be really creative about what those folks can do. It may be helping in another program that's more necessary than the one they're used to working in. And it may take a little bit of extra push on their end to accomplish that. But think about their talents, be creative about where you can use them, and feel comfortable moving people around to get you by in this time. Also, as a reminder, you should know and understand the provisions that are out there and required related to emergency sick leave, FMLA, and even unemployment. There are a lot of details associated with these programs, and we certainly don't want to get into so many details that we lose sight of what we're talking about here. But definitely on the emergency family and medical leave side, that reminder that if you have employees affected by coronavirus, whether they're sick or they're caring for someone who's sick, potentially have a child that's home because there's no school or daycare. I know many of us are in that situation currently, that there are requirements to continue paying those folks. Some of those requirements are at full pay, generally if they're taking care of themselves. If they're taking care of other people, that requirement is to pay them at 2/3 their regular pay rate. There are time limits on everything and specific requirements that go into that. So if you're not aware of those, make sure that you look into that and get some help with those rules. Unemployment has also been a pretty big topic. There are a lot of folks that have been laid off that are at home and not working right now and getting some unemployment dollars in. I have heard in the community that some folks are actually enjoying that because their pay has maybe gone up as a result of the unemployment. There is extra money going to each individual who's unemployed right now. That money lasts for a certain period of time before they go back to normal benefits. Some employees are more than happy to be laid off and not worried about working during this time because they're actually making a little bit more money. As sad as that is, it's been a great benefit for them, and it's really helped some businesses be able to cut back on their payroll costs and still make sure that their employees are in a good spot. The caveat with that, and what I warn you to be careful about, if you are laying employees off, there is that risk that they may not come back when you're ready for them to come back. So you really want to weigh the cost and benefit of doing that, because when we're ready to reopen and get back to normal, you're going to want those employees back in your office. I do want to let you know too that if you are laying off employees because of the coronavirus pandemic, that will not affect your experience rating at the state level. Okay, if we also think through some of the assistance that's out there and available for you. There are some new programs. I'm sure you've heard of these. Again, they are fairly complex. There is a lot of stuff that goes into these programs. The rules are changing on a very regular basis, and there are still a lot of unanswered questions about the mechanics of how this will all fall out at the end of the day. So any information that we give you today is the best information that we have right now. We are anticipating new rules later this week and hopefully some more answers related to those. But I do want to touch briefly on what's out there. First of all, there is the Payment Protection Program, or PPP. This program is covering 8 weeks of your payroll. There is a portion of this that can be forgiven if you spend it appropriately. This program is available for both 501c3s and 501c19 organizations. Those are veterans types of organizations generally. There are a lot of other 501c types that unfortunately do not qualify for PPP loans, but you'll get to focus in on the next one that we talk about. We know that round one of the PPP dollars ran out fairly quickly. There were some changes in round two to try to get more money out to smaller organizations, to smaller banks so they could loan to those organizations. But I would still recommend, if this is something you're interested in, that you get an application in very quickly because we're not sure how long these dollars are going to last. I also want to talk a little bit about tracking these dollars. It is incredibly important to track the specifics of how these dollars are being spent, accumulating invoices, accumulating payroll records, all of that very, very carefully in order to ensure that you can get your loan forgiven. Now, it's not the end of the world if it's not forgiven, but of course that's our ultimate goal. If it's not forgiven, the interest rates are low, you've got some concessions there to kind of help you get through it, but obviously not having to pay back those dollars would be the goal. Now, 75% of your PPP dollars have to be spent on payroll. That's gross payroll. It includes some benefits. Again, all kinds of rules there on what can be incorporated into payroll cost under the regulations. The other 25% of those dollars has to be spent on other qualifying expenses. Those are things like interest on your mortgage debt, rent, some utility costs, and again, there's specific regulations about what can and cannot be included in those expenses. In order to get the dollars forgiven, you have to retain your employees, and you also have to retain their level of pay. It's okay if you hire more or pay rates go up, but when things go backwards, then you're in danger of making that calculation not work on your behalf and not having all of those dollars forgiven. We also recommend that you really consider thinking about when you're paying your expenses. The regulations right now state that any expenses paid and incurred during an 8-week time frame, so 56 days essentially, are the dollars that will be considered for forgiveness. So for example, if you have a payroll that you have incurred the time, people have worked for you, and it's day 50 of your 8-week measurement period, but you're not anticipating making the payroll payment until day 57, that means you have incurred that pay, but you have not paid it in cash. So there is some concern that those dollars will not be considered in the forgiveness portion of that loan. So you want to make sure and pay absolutely everything out that you can prior to the end of that measurement period, that 56 days. We're also recommending, if you haven't done so, to keep those dollars in separate bank accounts. It's just going to help the banks at the end of the day with the tracking and following what you did to make sure the payments went the right place. You can continue to pay payroll and bills out of your regular operating account, accumulate all of the data, all of the support behind it, and then transfer that total dollar from your PPP bank account into your operating account to cover the expense. That way you've got a really clear trail of where those dollars are going. On the next set of assistance that's out there through the SBA, this one is not applied for through the banks, but directly through SBA. And it's called the Economic Injury Disaster Loan, or EIDL, as we affectionately call it. It is partially a grant, so when you apply, you can check the box and get an immediate $10,000 grant. That grant does not have to be paid back, but it does reduce the forgiveness if you have PPP dollars. So that $10,000 of your PPP funds would not be forgiven. The benefit of the EIDL loan is it's available to any 501c organization as long as they are not religious or lobbying. So different than the PPP, which is only for 501c3 and C19, the EIDL opens that up to different types of 501 organizations. The loan, if you move forward with that, can be up to $2 million. It's at a very reasonable 2.75% interest rate. Principal payments are deferred for 4 years, so it gives you time to kind of get back on your feet before you have to make those repayments. And it can be used for anything. Since there's no forgiveness attached with that loan, it doesn't matter how you spend those dollars. And the one thing that we learned last week, those of you that are familiar with single audits, the EIDL loan will be part of your single audit. It is considered a federal expenditure and will go on your schedule and be subject to those audit rules. For those of you who are not familiar with that, if you have over $750,000 in federal expenditures, you're subject to a single audit. My advice to you is if you can avoid being under that threshold, avoid being over that threshold rather, that is definitely the way to go, because that will cost you additional funds to go through with that audit process if you're required to do so. If you're already getting a single audit, this just adds to what you put on your schedule and could potentially be part of that audit. Two other things that are not quite as well known. One is a employee retention credit. So certain qualifying wages, you can get a credit back of 50% of those wages up to $10,000. So that'd be a maximum $5,000 credit per employee. Again, there's all kinds of rules and requirements to be able to qualify for that. And you can only get that credit if you don't have PPP dollars. The last one is a payroll tax deferral. And again, that's only applicable if there are no PPP dollars involved. And the payroll tax deferral is just deferring the employer portion of Social Security taxes that you would normally pay into the IRS. So your normal 6.2% employer portion would get deferred, with half of that not being due until 2021 and the other half not being due until 2022. Okay. The next thing we're going to talk about is just some other type of assistance that's out there and available. But before I do that, I also want to mention, if you have not figured out how to get some of the credits on the emergency sick leave and emergency FMLA, that should also get put on your to-do list. Some people are not submitting payments to the IRS of withholdings and employer taxes up front with their 941 deposits. Those will get reconciled on your second quarter 941. That form is in draft right now, and everyone is diligently reviewing that and learning how to complete those forms, but that's where that will get reconciled. If you have not reduced your payroll tax payments for the credits that are available under the FMLA and emergency sick leave, you can do that through another IRS form and get an advance credit of those dollars. So again, if you're not familiar with that, make sure you get that on your to-do list. Other assistance that's out there, certainly the reduced and free money coming from the SBA is the best option to go. There's no collateral required on it. It's pretty easy to apply and pretty easy to comply, just a lot of documentation and things to track. But if that's not an option, or you chose not to do that and you're having some cash flow problems, certainly look at just a normal loan. What's available for a line of credit, what's out there for other potential borrowings with your bank. Go talk to your banker, work with them, see how they can help you get through this. One thing you may not think about is existing debt that you have. Some debt agreements have what we call debt covenants on them, where you're required to maintain maybe a certain level of income, maybe a current ratio or some other ratio that's inherent in your debt agreement. And obviously, with the financial struggles that many of you are going through right now, you may not meet that debt covenant. I recommend talking to your banker as soon as possible. Don't wait until the end of the year when they're calling you and asking you if you've complied. You don't want them to call that debt because of any non-compliance issues. So just bring that to their attention up front. See if they can waive that debt covenant for this year to kind of help you get through. And most of them will be willing to do that. There's also a lot of waivers out there from the government as far as grant dollars. Some granting agencies are, extending the due dates for different reports, different reporting requirements. They may have new or different grant dollars available to help in a crisis. They may be even getting rid of certain compliance requirements. For example, they may say for the next 6 months, you don't have to worry about matching dollars, or they may expand who's eligible to receive funds. They may say that certain costs that you wouldn't normally be allowed to spend under that grant can now be spent for different purposes. So definitely reach out, make sure you understand what your granting agencies are allowing and not allowing, and take advantage of what's offered to you. Other assistance that's out there, this one isn't as well known either, and certainly there's a lot of folks not thinking about charitable contributions right now because we're all struggling a little bit. But there is, in the legislation that was passed, there is a provision for charitable contributions, and they are now deductible up to $300 without having to itemize. Normally, in order to take a deduction for a charitable contribution, you have to itemize on your personal tax return, and there's certain limitations in place. Those limitations are gone on when you itemize, and then in addition to that, you can take $300 just above the line. Some corporate donation limits have also been reduced. So when we kind of get back to normal and things start to recover, I really recommend that you do a small campaign. Reach out to some donors, reach out to the public, let them know that you're back on track, but you'd like some donations coming in to kind of help you get programs restarted. And go ahead and advertise that you can take $300 right off the top of your tax return. I know it's not a lot of money, but little amounts can add up quickly, and I definitely think that's worth reaching out for. And finally, just look to other nonprofits. Collaboration is so important right now. You may have a mission similar to someone else in the community or somewhere else in the state or the region that you can reach out and combine resources, have employees work together, maybe even share supplies or share fundraising ideas or other things to just get you through the time that we're in right now. So I certainly recommend that as well. Other existing resources. A lot of nonprofits don't have liquid cash on hand where they're just able to say we can survive the next year without more revenue coming in. But some of you do have some unrestricted net assets and some cash reserves. Oftentimes, those reserves are set aside internally. Management or the board has said, you know what, we've got this extra $100,000, but we're saving this for a rainy day. We're saving this for a building. You know, we have this dream and this vision of a new facility, and this could be our seed money. We want to save this and use that for that purpose. In this time, you may need to consider undesignating those dollars and really just going to your board and saying, you know what, I know that a building was something really important and we were hoping to get started on this in the next 5 years, but maybe that's now 6 or 7 years out, and I really need to tap into these dollars in order to keep my employees and keep my programs going. So that may be something that you need to consider. Also look at your endowment funds. I know investments are not a great topic of conversation right now with the markets, but if you have some flexibility in the earnings on those investments where you can prudently spend those dollars, now might be the time to consider doing that. Most endowment funds are retaining principal, but allowing the earnings to be spent either on specific purposes or even on general operations. And we really recommend that you think about how you can best use those dollars in this time. Talk to your donors and your grantors. Look for some flexibility on how those dollars can be spent. We'll continue on with this example of a potential future building. Let's say you had a donor that gave you $25,000 and asked you to set those funds aside in order to spend them on this building project down the road. As a donor, I would be happy to have a phone conversation with you and say, you know what, I understand that times are different right now, and I'm okay if you want to take my $25,000 and use it somewhere else. Where is the most need right now, and how can I help you push your organization ahead and help you retain your programs? And that may be a better use of my dollars than a building down the road. And I think if we reach out to those donors and those granting agencies, I think you'll find some flexibility in how you can use those funds. I would remind you, if you do that, that you will want documentation of that. When it comes down to audit and even legal reasons, you're going to want the donor to specifically, in writing, via email, however that works, be able to tell you, I unrestrict my dollars that were for this building, and now you can use them in X program for general operations, whatever that might be. Also consider some new fundraising opportunities. I said earlier that a lot of fundraising events have been canceled. I have also seen some incredibly creative fundraising events pop up parties, marathons, those types of things, where instead of using your resources to buy t-shirts, man a table where you're handing out water, registering everybody, instead they're registering online, they're paying a fee to help the organization, but they're running their marathon at their local park or around their block, whatever that might be. You can flood social media, with all of the pictures and selfies and publish names, whatever you want to do. I think people are itching to get out and about and help where they can. So if you're creative, you may be able to come up with some new and different fundraising opportunities. Okay, that's some of the assistance that's out there and available and some ways to manage your cash flows. Now let's spend a few minutes talking about forecasting and budgeting. I mentioned when we were talking about endowments and rainy day funds that some nonprofit organizations are lucky enough to have those. Unfortunately, most of you are not. We know from the National Council of Nonprofits that over half of nonprofits really just have 1 month of operating reserves. People think that nonprofits are not like normal businesses. They don't need outside revenue, and that's really just not true. A nonprofit is like any other business. They need to accumulate funds and have that rainy day fund for a crisis. Unfortunately, many of us don't. So really what you need to look at is where you're affected by revenue loss and how important your services are. The other myth that I hear is that, you know what, it's a nonprofit organization, they'll be okay, they can bounce back and come back stronger than ever later. You know, my business, I don't know if I'm going to be able to reopen. And again, that's a myth. Nonprofits are probably needed more than many businesses even are. As an individual, I can manage not going out to a restaurant for a few weeks. I can do curbside, or I can cook a little bit more, eat a little bit less, maybe, whatever that is, and save some money even. But there are things in the community that we still need to take care of. So the homeless, you know, mental health, there's a lot of domestic violence issues. None of that goes away. And your organization is needed sometimes more than ever in a time of crisis to help get through those things. So the forecasting and the budgeting really becomes even more important. So when you're looking at that, it's a little bit different perspective. You're not looking at where does this organization end up a year from now? And here's my goals for a year from now, or 5 years even. You really need to focus on dialing it back and looking at current goals and current needs. We talked about getting back to the basics. What is your core mission? If you're just going to feed the hungry in the community, then what else are you cutting out? And where does your budget need revised to reflect that? Be honest about that. Be realistic about that. It's really changing your strategic plan on a short-term basis to respond to the pandemic. Back to the basics. And when you know what that basic role and basic purpose is, adopt a budget that will reflect that change. I also recommend looking at more than one forecast. Obviously, you need to look at your current situation, be intentional in how you're spending your money and what you're spending it on. Document that in your budget as a tool to help you, but then consider more than one forecast. What happens if? So we're in phase 1 of reopening. What does phase 2 look like? What does phase 3 look like? What happens if we're back to normal in a month? What happens if we're still in the same position 6 months from now? Or what happens if we're back to normal and then the virus comes back and we all have to shut down again in the fall or the winter? But put together more than one forecast and more than one option so that you're ready to respond quickly when change happens. I also recommend consistent and continued communication with your board, and maybe even more communication than what you've had in the past. As managers, as CFOs, as executive directors, you're really focused on responding to the crisis at hand. And your focus may be, you know what, we're going to drop this program, or we're going to lay off X number of employees. But when you talk to your board, they may have some other ideas. They may be more creative and think of something that could help you. They may disagree with your thought process. They may think project A is more important than project B. And you really need everyone to be on that same page and thinking about the same ultimate goal before you get your budget and your forecast put together. Nothing will be more frustrating than putting all of that thought and all of that work into it and realizing that your goals are different from your board of directors. So keep that communication process top of mind. Also, make sure before you get started that you're completing some short-term calculations. How much cash do you have on hand right now? What other liquid assets do you have? Will you collect your receivables? What's your investment portfolio look like? And what's the unrestricted portion of that that you can access? Add all of that up to determine how much available cash you have and compare that to your required monthly expenses. If you've got way more expenses than you do available cash and you're not sure where the revenue is going to come from, then obviously you need to look at cutting something or finding another way to generate those revenues. But by doing this calculation, you're going to be able to figure out how long you can last on your current resources. And that's going to be really important to some decision making. The other area that we wanted to talk about today is internal controls. We all know internal controls, right? You know how important it is to make sure that one person's approving it, somebody else is issuing a check, all of those types of things. But when we're in financial crisis, some of that goes to the wayside, and quite honestly, just is not top of mind like it should be. And in this time, it's really critically more important than in other times that you're being on top of your processes and the controls that govern those processes. When I think about internal controls, I think about a triangle, and we're going to talk about what this triangle looks like. But this triangle is really an internal control triangle. And if any leg of that triangle is broken, imagine your three-legged triangle and one leg of that is missing, then your process is broken. And when that process is broken, that allows for fraud and error to come into play. The last thing you want to do as a nonprofit organization is be in a position where you have allowed fraud to happen in your organization and your public image is destroyed in the community. You rely on that community support. You rely on your donors. They're trusting you to manage their funds appropriately, and you need that trust to continue. So it's incredibly important that you continue to be a good steward of their dollars and that you focus on internal controls, even in a time of crisis. So let's think about our triangle. The three legs, and we have named those legs rationalization, incentive, and opportunity. We're going to talk about each one of those legs and how important they are. Rationalization is the first leg. What does that mean when somebody rationalizes the fact that they can steal from you? Okay, so what that sounds like or looks like could be an employee saying, you know what, they've cut my hours, they've cut my benefits a little bit, I'm not getting the same 401k match that I normally would have gotten, I'm stuck working at home and I really hate it, I don't get to talk to my friends anymore, whatever that is, but this is really kind of a bummer and I'm not being treated very well, so I think I deserve a little bit extra. And I'm going to take this money from my employer and I'll just pay it back later. It will all be okay. That's what rationalization looks like. Now, as an employer, you can't control what people rationalize in their own head. There's really nothing you can do about that. So if that leg exists in your triangle and they're able to rationalize stealing from you, you're kind of stuck with that, okay? The second leg we're going to talk about is the incentive leg of the triangle. Incentive means that that employee feels like they have a need and a reason to get more money. They need to steal from you. Their incentive may be that they're not making as much money at the job, the benefits have been reduced, maybe they have medical issues, they're caring for a family member who has gotten really sick and their insurance isn't covering things like they thought it would. Maybe they have somebody in another geographic location that they're trying to take care of throughout this crisis, a friend that has lost their job, another family member, whatever that may be. But for whatever reason, they need the money and they have an incentive to steal those dollars from you. Again, just like rationalization, there's not a lot that you can do to prevent that. If they had a need, there's nothing you can do as an employer to make that need really go away. So that gets us to the third leg of the triangle, which is called the opportunity leg. Now, the opportunity leg is the one leg that as an employer you can control. And if that opportunity leg is broken, fraud can happen. If that opportunity leg stays in place, this is your internal controls, if that stays in place, the fraud is not going to happen because you have found a way to keep that triangle intact. It's not broken, and you're going to protect your assets. We know that remote workers are changing your processes, right? Things are just not the same as they used to be. That's a fact. We also know that there is a lot of confidential information that may be leaving your office at this time. I want to remind you to really think about that and make sure that you're protecting that information the best that you can. More electronic use of documents, less paper leaving your office and going home with your employees, all of those types of things are going to be really important right now. But when we talk about internal controls, we're going to focus on a few key areas. Those areas include the list that you see in front of you. The first one we're going to talk about is disbursements. Most of you are used to an invoice comes in the mail, somebody gets that invoice to your desk, you're reviewing it, you're approving it, signing off on it, shuffling it over to the accountant's office. They see that piece of paper, they're cutting a check, which comes back to somebody for a signature, and it's a very paper process, right? Well, in this environment, I'm gonna bet you've had to change some of that up. You've maybe switched to ACH, maybe you're getting invoices scanned in on the front end or emailed to you. Maybe you're not able to sign off on that piece of paper anymore. Maybe it's difficult to get a check signer to come and be that second signature on a check. All of those things may have been disrupted because of the pandemic that we're in. So it's time to get creative. Just like I said about fundraising or revenue sources, it's time to be creative about internal controls. Everything still needs reviewed. So invoices need reviewed, checks need signed and approved. How do you accomplish that remotely? Email is a great tool. Be as specific as possible when you're emailing back and forth. You know, the invoice comes in and I see it, or I've got a list attached to my email that says, here's every vendor, here's every dollar amount, and yes, I approve all of the attached bills for payment. Or I approve, you know, vendor XYZ to receive $500 on this date, signed by the executive director. Think about in electronic approvals what can be changed without you knowing it. So for example, if you're just electronically typing your initials on a document, somebody else could maybe do that same thing, not forward you an invoice, put your initials on it, and still run it through the check approval system. Make sure that you're using things like electronic trusted signatures and PDFs, using notes within Excel where it documents who's logged in and who made that note. Think about those types of things to help protect your internal controls related to approvals. Cash receipts. I know a lot of organizations have 2 people involved in opening the cash, logging what's there. You can still do that, but again, get a little creative. Think about things like using Zoom or FaceTime or Skype, any of those things. Have the camera right there, the phone right there, so you can see what they're doing. You can keep a log, they can keep a log. You can pass those logs on to somebody independent that matches them up later and make sure that that's the amount that hit the general ledger and hit the bank statement deposit. Bank reconciliations. Hopefully you have managed your online banking well so that the right people have the right access. Don't forget that certain people should not have access to transfer funds or move money around, but maybe only view access so they can see the statements and see the transactions. You can still reconcile your accounts even without the paper. A lot of times you can print your statements off of the online banking to PDF, do the reconciliation in Excel, or do it on paper and scan it back in if you've got that capability. Again, still watch for the approvals and how that's being done electronically, just like we talked about with disbursements. Monitoring, board discussions, all of that needs to happen. Financials still need reviewed. You need to compare your new and adopted budget to what's really happening and make sure that things are going as planned. You need to be able to respond quickly if they're not. So having up-to-date financials, making sure those are being reviewed by the board, being reviewed by the executive director, all of that monitoring becomes more and more important. From a documentation standpoint, just because we're working remotely or just because we're in crisis, our documentation requirements unfortunately don't go away. If you have auditors come in, granting agencies come in, they're still going to need to see that you followed your processes and you've got support for everything that you've done. So you don't get a pass on the documentation side, unfortunately. Also, don't forget about IT controls. Things like my employee has taken a laptop home and is their connection through their wireless network to our server adequately protecting us? Have we taken people off the system who have been laid off or furloughed? Have we changed passwords appropriately? Are backups still getting done? If my employee is working on their home computer, have we put a process in place to ask them to keep all work documents off of their personal computer so that they're just connecting remotely? More people may be using phones to tap into email, those types of things. Can you wipe that phone if necessary? Are there passwords required? Just kind of think through all of those internal controls related to technology. And really, that's the key. You know, we talked about managing your dollars well, controlling your expenditures, cash flows, looking at a different way of forecasting and budgeting in the short term, and then really paying attention to your internal controls and keeping them solid. All of that involves some creativity. We need you as nonprofit organizations to continue to be on the front line. We need you to manage your cash flows. We need you to use the resources you have available to you and use them wisely so that you can stay focused on helping the people in our community. Our community needs you, your staff needs you, your staff and your families. You all need each other to get through this. The last thing I want to have happen is for you to be on the front page of the paper because you've kind of fell apart and allowed some bad things to happen during this crisis. I would like all of you on the front page of the paper for stepping up in this crisis and finding a creative way to serve our communities. And hopefully some of this information will help you get there. Audrey, I think, is looking at our questions that have been commented as we've gone along. Do you have any that we can answer?
Yes, we did get a question in from, I believe it's pronounced Ronnie. She wanted to, it was wondering if you could clarify on the payout of the PPP funds during that 8-week period. She just wanted to make sure if that was something they have to pay out prior to the end of that 8-week period.
With what we know now, that answer is yes. You have a 56-day, 8-week measurement period there, and the expenses that you incur and pay in that 8 weeks are the expenses that are eligible for forgiveness. Now, we're still waiting on, more regulations, hopefully, and some clarification of that. But right now, the way that's written, it says costs that are paid and incurred during that time frame are what's eligible for forgiveness.
All right. And I just want to add that I found the one part that you had mentioned about forecasting just really interesting. As somebody who's a planner myself, it's kind of a nice little backup to have, to know that you have a plan A, B, C, D, E, just to especially in these uncertain times when you just don't. I imagine some people that are tuning in are a little bit more visual themselves. How would you suggest going about putting together a plan like that? I know you said like a 1 month, a 2 month, 6 month. What's a good visual way for some of these organizations that are coordinating that sort of stuff?
Yeah, well, you can certainly get carried away pretty easily, and you can come up with so many scenarios that you get lost in it. So you want to find a good balance. But really thinking about, again, back to that mission. What is it I want to accomplish? What's most important? And maybe you can put a list of importance together. Here's number 1, number 2, number 3. And if I can only accomplish number 1, what does that look like? If I can get the resources to accomplish number 2 and add that into my budget, what does that look like? And again, thinking about best case and worst case, not knowing how long this is going to last, not knowing what we look like in 2 months or 6 months, it's probably smart to at least get a couple of scenarios put together so that you can adapt quickly. They don't have to be anything really pretty. I know visual people like pretty stuff, but we are still working under crisis, and it's important to do it quickly and do it well. So even just a quick Excel spreadsheet of here's scenario 1 and what I think it might look like, and here's scenario 2. And we're hoping for number 1, but we'll be prepared if number 2 happens. And something of that nature will really kind of give you that visual picture without getting too carried away in, the stress and the thought process of what if, because there can be so many different things that happen.
Yes, very good point. And to just clarify as well, when you were talking about the PPP and EIDL, that is something that people can apply for both of them. It's just that I believe you said it was $10,000, correct?
Yeah, the PPP is based on your 2.5 months of payroll expenditures, what those normally are, and the banks will help you with those calculations too. But that's applied for through a bank, and it's available to 501c3 and 501(19) organizations. In addition to that, you can apply for the EIDL. The EIDL is an immediate $10,000 grant, and then it's a longer-term loan in addition to that. That loan does not have the restrictions on how to spend it, but you do have to pay it back. And it's a low interest rate, it's pretty decent terms, and that is opened up to other types of 501c organizations, not just limited to the 501c3s and 501c19s. So as a 501c3, you can get both. If you're a 501c4, you're only eligible for the EIDL.
Okay. Well, I believe that is all we have for questions for now. Of course, though, if anybody who's tuning in afterwards and you do have any questions come up, please send them our way. You can send an email, and we will be sure to address those questions. I'll follow back up with Jean here, and we can kind of stay in touch with any type of questions that may come along after the fact. Jean, is there anything else that you would like to include?
No, thank you very much for having me on today. I've popped up our list of who in our office are the best contacts from a nonprofit perspective. Check out our website, www.ktllp.com. And as Audrey mentioned, she can be a liaison between us also to get questions answered if more things come up.
Yes, wonderful. And thank you so much, Jean, and to your nonprofit team and Ketel Thorstenson for all you guys do for the community. And it's so great to have that nonprofit advocate. And I just want to remind everybody, after this presentation is over, we will have it recorded and we'll post it as soon as it's available. Again, if you have any questions following the presentation, please feel free to send them our way and we will be sure to address those. And finally, any of any type of additional resources that are included in with this presentation will also be included in with that video file. And then I just want to end off with anybody who is interested in learning a little bit more about what United Way is doing during this time, especially with our United We Stand Fund. I encourage you to go to our website, www.unitedwaybblackhills.org. And then I want to thank Vast Broadband for sponsoring this webinar. And I wish everybody else a great rest of your day. Thank you.